You can see the screen.
Yes, sir.
Okay, so this is what we started yesterday. So what is ERP? So ERP we call Enterprise Resource Planning. So the leading ERPs in the market are SAP, FICO, and Oracle. Every module it is having manufacturing, SCM, everything. Okay, SAP and Oracle are the leading. You know, very small softwares like PeopleSoft. There's that everything bought by these people, and these are the leading ones. So what I told, Oracle Financials. Oracle Financial module consists of AR, GL, AR, assets, cash management, and payables. Okay, so it is common for all versions. Either it's 11A or 12 or Fusion. Okay, so why we call ERP? We have integration with other modules. See, we have HCM module. So as I told, we have purchasing, we have order management, we have inventory. Okay, where is inventory? We have inventory. So, okay, we have inventory. So this is called supply chain modules. Okay, so supply chain modules, any modules other than finance has to integrate with GL. Without finance, it cannot work independently. Okay, see here, sales order, what I told, if you want to sell something, you need inventory in the godown, correct? Stock. So whenever a sale is happening, inventory will get reduced, deducted. Okay, it will be. Whenever you purchase, inventory will be added because it is the goods or things coming to our town or this one. Okay, so these three coming from supply chain, sales order, order management linked to receivable. And once payment is received from the customer, then it comes to GL. This is called O2C flow, correct? Same thing, from inventory, you do a purchase order, then there is a process called receipt. Then it comes to AP, we create AP invoice, payment. This process is called procure to pay. Okay, you don't have any doubts from here? In the recorded video also, correct? So I told other modules like HRMS, there are very I received many things are there. See, human resource, they have a payroll, absent management and everything. Okay, even though payroll, it has employee data, employee absent management, end-to-end data. The salary processing at the end of the month or employee advances, whatever it is, it has to come through AP payment only. So even HRMS has to integrate with AP and normal flow. AP will come to flow to GL. So every other module has to come to finance only. So the link between every module, it is called ERP. Okay. So you understand the overview, right? Any doubt on that? Soundarya or Lakshi, you have any doubt?
No, sir.
Are you gone through today? Okay, okay. Okay. So after that, what we seen? So we seen the differences between R11, R12 and R13. So what is R11? Soundarya, can you explain?
R11, there is a set of books, sir. Calendar, chart of accounts, and currency. Three sets of books.
So R11 has 3C. Why we need R12 then?
The R12 we have extra books. The currencies will be added. So
So we have extra C. What is the fourth C in R12?
Currency.
No, currency already.
Department. Department.
No,
we can
no.
need the accounting.
Accounting convention.
Accounting convention. Okay. So other difference. So R11 big set of books. Okay. Here we are calling ledger. So ledger we have primary ledger
and
multiple
secondary ledger.
secondary ledger. So
So,
as said, the accounting convention or XLA, subledger accounting. Okay. See, and we have multiple secondary ledger to accommodate the difference between NEC. Suppose we taken the example of India and US. For US, okay, calendar changes Jan to December, March, and the accrual method here they are following cash method of accounting. So any one C changes, you have to create a secondary ledger. And one more concept, we have a reporting ledger in R12. Okay. Reporting ledger. What is a reporting ledger? Suppose we have to report our branch in India, we have head office in Singapore. Okay. So they say that whatever here you are making the entry, it has to be reflecting the reporting ledger. So we have to configure a reporting ledger. Okay, it only will reflect. So no transaction should be made there. See, we have a doubt that why we have then translation report. We have translation, right? Translation revaluation.
Sir, ஒரு நிமிஷம் திரும்ப சொல்றீங்களா சார் அந்த ரிப்போர்ட்டிங் லெட்ஜர் மட்டும்?
Okay, reporting ledger. So reporting ledger just it will report each and every transaction in the other currency. If you want to do, if you add in the setup, this we can see in the setup. Okay, once we do, you have gone through the okay. So 1 minute. Okay, see what is a reporting ledger? Will report. Okay, I'll show the scenario after this. Okay, like we seen yesterday, we'll see a scenario how it comes. Okay, so don't worry. Reporting ledger. So what else in R12? Okay, so Fusion, that is also having 4C. Okay, here we have a database, it is stored. Now it is cloud version. We call Fusion or cloud. Okay, for finance, I think most 95% is the same, only 5%. Then when we'll work, we will see. Next, what we seen, what are the 4C? Okay, so I explained you what is chart of accounts. We take an example of Tata Groups. So we made, what is this called? What bifurcation of this first line?
Business.
Department.
department.
So this is called segments. Okay. We are bifurcating. When we go for a please put in me. See, when we go for a fresh implementation or we want to set up a new ledger group, so this is called as is we are getting the business, what are all there, and we are configuring into the to be process. Second step. So there, while going to a business, so we are analyzing the existing business. Maybe they will have other software or ERP. Maybe we are doing a fresh implementation. It is called vanilla implementation. Okay. So nothing is there. We are doing a fresh. So we are analyzing what are the type of business they are having. Okay. Number of businesses we'll put here. And what are the departments they are having. Each business we have to have separately. And accounts are, we know that only 4 type of accounts are there. Sales, expense, liability, and asset. We have the type called retained earning. So only the 5 types we can put entire accounting. Okay. Cycle. So products. So we have products. Why we have a product segment? Remember why we added a project segment in this chart of account?
To make any changes in futures. We want to add
this future segment. Why we have a see, each segment have a significance, right? You have business. See, minimum 2 segments, maximum 30 I told. Which is the mandatory 2 segments here?
Product and
Future 1, future 2.
No. Business and account. Company account we should have. You cannot do. All others are optional only. That's why I highlighted here. Business and account are mandatory. You can name it company. I am naming it. See, it is based on consultant knowledge only. Somebody will name it company. You can put account or you can put natural account. You can name it IFRS account. It's all depends on client and the consultant. Okay. It is not fixed. Maybe this may be first segment, this may be second, everything. So why we have a product segment? Because see, suppose software is a service industry. Okay. For service industry, we know it product or sub-product. But we have a business called food product, communication and steel. They will have a product, sub-product and all. It is mandatory for them because without product mentioning there, it won't work, right? It is difficult to build a chart of accounts. Suppose software is there, we can take out the default ones, 0. For us, we don't need. It's a service industry. In future is already 0. Okay. Right. So this is called segments. Then what I told, this is called values. Okay. Where we create the value is called value set. I told this is the values is 2. Maximum number we can decide according to the business. Okay. How the business needs. That's why I put somewhere 4 digits. I put somewhere. So everything is numeric or alphanumerics. It is based on the implementation process and how the business needs. Okay. Now here why we have different numeric. Suppose for sales or revenue we have 1 series, expense 2 series, level. Why I have given that? Any idea? So that why we have given, suppose while the user is creating the invoice, so after he is familiarized with that, he will remember that, see, sales 1001 to 1 series is sales or revenue. So it will be familiarized, he will not be mistaken. So expense will be 2, liability will be 3, asset will be 4. So that's why we have number of, and also we can fill it. Maybe you will have 100 or 200 accounts now, maybe 1000 or something like that. 200 accounts we have means 1001. We'll have 200 to that. Okay, in future you can add the values, but not this segment. That's why we have future segment. Okay, we can rename the future segment and we can use it because once it is created, we cannot add or anything. That's why we have enough buffer to this. Okay, that's why we have that. Okay, so how it is accounted in the ERP? I seen the example with the basic journal entry. Sales to cash. A basic journal entry we see in the books, sales to cash, cash to sales. So how the Oracle picks, here is the example we taken. Okay, now we will take different example. We build the chart of account. Okay. Okay. Now we'll take a purchase entry. Okay. Purchase to cash, right? So how the entry will come in ERP, tell me. You want?
2000.
Okay, first it's made for business. Me? Which business you want to purchase? Food products.
Two, sir, two.
So which department purchase department?
2000 to 2999.
No. Here. Purchase department.
002.
002.
02.002. Then purchase come under picture.
Expense 2000.
Okay. Expense it will be like 2001. Okay.
0000.
Wait. What 000? Which company you take? Food product involves product should be any of the product. So it's default. Okay. Right. Understand?
Okay, sir.
So default only for the software. Food product involves a product, right? So you have to take any one of the product. For example, rice or something to make cereals like that. Okay. So we'll take 001. Next sub-product, if it is needed, you add it or it will be default. Then automatically future is 00000. So this is debit. Debit we taken purchases account, correct? Credit only that account should differ, not the entire thing. So what is the credit is cash or bank. Now tell me which expense I have to take for cash or bank in the account. Under which account?
Expense account, sir, 2000.
Cash or bank will not come in expense, no? Bank account where it will come?
Oh, asset,
Debit.
4000. Debit asset.
Asset account.
Bank
Okay. Credit because credit what goes out, right?
account.
4005 or something. Okay. So this is how it will reflect in ERP. So as I said, what it will come, it is that 202. So description will come like this: food products dot what we are doing, bank, right? Department is same, purchase department, correct? What? Asset. Bank, maybe X bank, Canara Bank or something. Then product is something. Then default, it will come default, whatever you give there, default. So this will be the description of the credit. Same debit it will come, except bank it will be purchases. Okay. Understand now? Clear?
Yes, sir.
So this is department, that is purchase account. Okay. So up to this is chart of account. Other C will be easily created, that we can see in the practical. Calendar, currency. Okay. Next what we seen, what are the type of projects we can see. So I told about 4 scenarios. Okay. What all we will do in the real work. So first I told implementation. What is implementation?
We need to create the software for the particular business or service.
Yeah, we have to implement Oracle for the thing.
Software.
We can buy, because we have to, as a consultant, we are going with the client. Whatever we did here, we'll do here. That is implementation. See, designing of chart of account, and we'll implement and uploading the data. Okay, that are all doing come under implementation. Correct.
Yes.
This is so implementation. It has a different types also. We call vanilla implementation implementation without any custom development or something. We call vanilla implementation. That means it is easier, direct setup. Okay. Suppose it needs, Oracle doesn't have many. Suppose you are implementing for mining industry. Okay. So mining industry, they are specific requirement. They are telling each and everything. It has to be linked to asset, each and every entry. Oracle doesn't have a field. We have to get some extra fields into the existing invoice screen. Means technical help we have to search. Technical consultant will help you create some fields. Okay. So like that, custom development if required, that is called another custom development implementation. It will involve certain risk and time. It will take some time. So that is other type. Okay. Vanilla implementation is very simple. Okay. And implementation other type also there. We have rollout. They call rollout implementation. What is rollout? Rollout means you do implementation. Suppose same example, Tata Group. Okay. You do implementation in TCS India, right? So they want to do the same thing in TCS US. Maybe they are having a different lecture. So the solution is same. Whatever you created here, you will create there, because the same logic you will create. Only the basic like the legal entity there, that everything will be changing. Okay. So we call rollout because same thing we'll do there. That is no differences. That is called rollout. Whatever solution is there, we'll do for all 150 countries belong to the same organization. So that is called rollout. That also we can do. That is also comparatively easier. The same solution. Only the localization, taxes, currency, and some reports if they require in the specific country. If you see South America countries like you see Peru, Venezuela and all, they need a separate report for the tax authority. So there it is an additional thing you can do it, but otherwise 90% it will be same only. Okay, right. So next I told about support project. So support project is like you are supporting a after implementation support team will support it. So there are the L1 support, level 1, level 2, level 3. Level 3 it's a normal support, the functional support you do technical. It won't involves any changes in production. Anything is that they raise a ticket to L2 team or L1 team, which is maybe mostly it will be external team. They will some IT companies or something they will have there. Okay, they will hire it. It may be an internal team or they may outsource. So what is enhancement project? Enhancement I told suppose you are yeah.
New business products.
Not new means implementation. I am already implemented. Okay. Suppose I am opening in a country or somewhere, or I am adding a new product. So in the existing product, I am enhancing something. That is called enhancement. They are telling please create a new ledger. One more legal entity. So they want to add one more operating unit. Like that, once implemented, right? They are doing some. See here. This is R12 structure. They are telling one more legal entity I need for this country. Create it. So you can do it. Legal entity for US or something. Now we are in India. So under that, what is the implication? Once we create a legal entity, which are all modules will be get affected? Maybe AP affected, AR reports. You have to study that. Do always you create in the test instance, then you go for the production. Okay. That is called enhancement. What is called upgrade? Upgrade, as I told, we are in Oracle 11a, the older version. So from 11a, they are upgrading to 12. Okay. And from R12, they are coming to R13. This is called upgrade project. So they will apply a patch, and as a functional consultant, we'll do all testing. How the invoicing work, how this work, and everything. So this is what we will see. Okay. So this is R12. This is a flow. Okay. So up to this we have seen, right? So now you have understood, right? Anything you want to see? Okay. Now I'll show an overview what all we'll be creating for a GL setup. Okay. Or we'll see the equally we'll see the theory. Okay. I'll share the screen. Can you see the new Excel? Fusion, Vision, OU, General Board?
Yes, sir.
Oh. So we have seen the overview how the GL will look, what all you create. Okay. Now in Fusion, I uploaded there, right? So what all we'll see as an overview. Okay. Okay. So yesterday we discussed the flow, right? What is business group and all? That is release 12. So this is release 13. So release 13, there is no business group. We are calling enterprise structure. Okay. And second step is same legal entity. Ledger. You see the difference. We have ledger as the second to business group. Now they call enterprise structure. Okay. Enterprise structure is first, then legal entity. What is legal entity? Legal entity, see here we have given. It is used for all statutory reporting purposes, tax reporting, financial reporting, Example I told, no? India, we have corporate, we have to register in the legal affair, we have to do income tax, whatever it is, GST, everything. Okay. So we will have multiple legal entity. Then ledger, books of account, it is storing. Okay, ledger is the key. Then instead of operating unit, here they name it as business unit. Okay. There we see operating unit. Now you concentrate only here because only we are going to see release 13 fusion. Okay, clear? So these are the multi-org structure, enterprise structure, legal entity. Third, you define ledger. What is ledger? Same 4C. Business unit is where you work. Inventory organization is the supply chain management to store all the inventory organization. Next is costing organization. Okay. So these steps you create first to create the organization. This is the first fresh one you will do. Next, legal jurisdiction. Okay. Legal address, legal reporting. This is very simple only. Okay. Okay. This is okay. Okay. Right. Okay. See, whenever you create an implementation, we will be restricted by users, right? Suppose we 4 are there. So everyone cannot have everything, right? Some managers will have the setup access. Users will have only user access. Okay. Like that, they will give the access. Who will do the job role? That is under the system administrator here. We will create a role. Role, who will do what? Okay. That is the role. The role we will create. These are all we will create in the steps.
Screen எதுவும் வரல sir.
Sorry.
Screen எதுவும் வரல sir. Displayல.
Wait. Now.
இப்போ வருது sir.
Okay. Okay. Implementation users. இத பண்ணுவோம். Configure offerings. Offering is nothing but which module you are going to configure. Okay. We are going to configure finance modules. Oracle Financial. இதெல்லாம் Oracle Financial. Okay. So it is based on the business. See that business. So we will tell them these are all the modules required for your business. It is the business to decide what all they will get the license and paid. So we will implement it, right? So now in Fusion, I think everything is accessible. Once you are using that, I think you have to pay them. Okay. Right. HCM means human capital management. Okay. Creating location. Now we are creating the first step only. For the, see, I told you, no, we have to create the 6 steps to create a organization structure. Okay. These are all step by step we will see once we do practical. Create chart of accounts. See, we told, no, manage chart of account. Yeah, they given all the steps. Don't have to worry. You see only this chart of accounts we will see. See here in the example, they have 4. Okay. Right. Can you see the screen?
No sir.
1 minute. Okay, right. See here we have company, department, account. Only 3 segment. In the example we seen 7, right? Here company, department. See everywhere I told company and account are mandatory, right? Without that you cannot do. Company, see here segment they added intercompany, 4 segment, 4. Okay, right. Value set. Initially I told, no, you will create a segment, you will create value set, calendar, currency. Currency, it is already in the system. That's why they say verify the currency setup. Okay. Verify the currency. Okay. So once we create that, for ledger, what all we have to create? We have to define primary ledger. And ledger and legal entity, we have to link it. Okay. Okay. The next step, we are creating business unit. See, these are all comes from here only. Step by step, they are creating. See, there are some step inside, they are creating it. These are all practicals. We'll see slowly. Don't worry about it. Okay. So assign the legal entity. Once we create the ledger, legal entity and ledger will be linked. Assign balancing segment value. What is balancing segment? Okay. We see in segment, right? So we seen 4 type of segment, correct? Company, department, account. Suppose here intercompany is there. Okay. Oh, we will create in the system and it will start working. But our system, no, this is company, this is department. Here I am giving 00101. Here I'll give 001. So we are just specific number, but we know that account means it is debit or credit like that. How the system will know. So we have to assign this segment value, balancing segment value. Okay. So we have to assign each flex field qualifier and segment qualifier. There are 2 things. So why they call flex field qualifier here is simple only. Okay. See, for a company, we have to assign a segment called balancing segment. What is balancing segment? Debit and credit should match. That is called balancing. Suppose in a company I create debit of 100 and credit of 95, it won't match, right? System should not take. So balancing segment will not allow you to post the entry. Understand? Okay. That's why we have to assign to balancing segment. Okay. There is one more option. Suppose debit is 100. Okay. Credit is 99. So while doing the setup, if you see down, there is an option called suspense account. If you give suspense account, it will ask whether I can use a suspense account for balancing. If it is okay, mean the remaining one USD or something, it will take from the suspense account and post the journal. Okay. And we have for department, we have cost center segment. For account, natural account segment. Natural account segment means it will see the expense means expense. Intercompany segment. All others product and all, it is optional only. You don't have to assign anything. Okay. Okay. Right. This we can see. A group mapping with LDG. Okay. Create business unit. Okay. These are the major step what we listed above. It is like a operating unit. Here only you will see you will work on it. It is like a branch or whatever it is, you can see. Assign business unit function upon the business unit roles. Okay. Manage user. Okay. So you are creating the user now. So who will work on it? Suppose you created everything and worldwide you are having branches around 170 to 200 branch, and see, you know, the BPOs are working, no? Suppose for the big concerns, you know, this big product companies, BPO we have working for US or UK or our own Indian company. So everybody will not have the access, right? Okay, one we will do AP invoicing, one team will do AP payments, one will do intercompany, one we will do journal creation, and one team will do journal posting. So that is called segregation of duties. Term, right? Segregation of duties. That's why we have ERP to control it. So that's where the user will be created. The user, suppose A user, you will give AP invoice user. And the managers will give only inquiry access. Manager audit. Inquiry means he will not able to enter it. Maybe he can able to approve. Okay. Because he doesn't have the transaction work, right? Like that, level wise, we will assign it. See, assign roles to implementation users. See, they're bifurcated. CFO, general ledger manager, account, like that. Okay. So it are all defined according to with the discussion with the client only. So he will say for CFO, give this access for this, but we can suggest based on our experience. See, CFO will have only approved access and to run the report. If you want to see, general ledger accounting manager should have journal approval, and journal, he can have manual journal entering also. Like that we have to discuss. Okay. So this is the setups we will create in the GL. Correct. Okay. This we'll see. Just I given you an overview. Okay. So this is what we will create in the general ledger. Okay. You can see the old Excel, right?
Yes, sir.
Okay. Okay. I think that will be very blank. So don't worry. That are all setups we will do in the practical session. Okay. From next week we will start that. So that don't worry. That is very easy only. Just understand the concept now. Okay. Okay. Now I'll show you. I told we will do some documentation. No, we'll do implementation. I'll give the overview how it will look. Okay. So that you can have an idea. So because, okay. Oracle Finance Volume 3. You can see the Word file. Business blueprint.
Yes, sir. Please, sir.
You can see, right? So this is a methodology we'll follow for implementation. Okay. Suppose for any software process. So up to R12 we are following this. Okay. This is called AIM methodology. Right. What is AIM methodology? I told implementation. No, it is having a steps. First they call kickoff meeting. So we will see a feasibility study. Feasible means any client you cannot implement. No, whether we have to see they have that much of business. They have whether they will have the ERP they can implement. Okay, and they can use it. It is worth implementing, and they will pay our on time. Everything we have to access it. And project planning. The project planning team will go. They will see how many consultants should we put, how many finance consultant needed, how many SCM consultant needed, like that. Then we'll allocate the resource. Then these people will do ASIS, business process. Okay. I told no implementation. I told no we'll create the chart of account, right? That happens here in the 2B process. First we'll take it whatever is there in the business. Suppose they are using Tally. I will study the existing process, what they are using. That is called first process called ASIS. Now 2B. 2B means we will create an Oracle test instance, all test only. We will create how the scenario works in Oracle, not 100% will fit. For example, if you create in Tally or you create in bookkeeping, no, we'll do in direct bookkeeping. So suppose supplier is we are giving a payment to supplier. So what entry we'll make in our books? So we will make directly supplier liability to payment, correct? One entry. But in Oracle, any payment will not directly can be made without an invoice. Even the prepayment advance, you have to create an advance invoice. So there is a gap. It cannot be directly done. You find it easy in the Tally or a small software where there is a block because without invoice, ERP will not allow. So for ASIS, the first step, whatever they are doing it in the accounts and what is Oracle is doing, there is a difference. That is called gap analysis. See gap. This gap we have to fix it. Mostly like that, many technical difference that will come. We will sit with the technical team. This is the document. This we'll see at last how it will be designed. I'll show the sample. Why we have documentation at each level of implementation? Because some consultants will come and go, right? So somebody will come, how they know what is happened? See, up to transaction level, person one will be there. He left the job. Somebody has to take over, right? So he has to know what has happened. So we'll make a documentation at every step. So once the gap analysis is done, then we'll go to the next step. Okay, any customization needed, any workaround, extension, personalization, all technical. See, we don't know technical, but we have to give input to technical in identifying the field. We'll prepare these documents. Okay, we'll give the requirement to the technical team. See, here we need this field and they will check the table name and tell us, okay, this is possible. This is they like this, we'll do. Okay, then we do a setup document and finally a testing will be done before go live. We given training to the end user, we do UAT, custom point, anything. Then finally the go live will come and the will support the production. So this is the complete implementation process. Okay. So I given a sample. Suppose current process model BP. So this document we prepared like how the existing business is there. Okay. This is very detailed document, but they will have very few only. This is for a manufacturing client we taken as a sample. Okay, see here how they captured in detail. So general ledger we went there. So we are seeing that chart of account what they are making at present. So we are taking journal management what they are. So we are dividing what all the tasks they are doing in the accounts. Forex what they are doing allocation. So this is the very detailed one. You see only 5% of this in the real scenario, 5% or 10%. Okay. See each and everything how they define. See chart of account how they are managing. See they are maintaining general ledger chart of account validation. They do a validation before adding it like that. It is there. And if you see, okay, so they are telling they are using tally for GL, AP, AR. Nature of technology purchasing. See, they are telling the existing team is using Tally for this and they are using Fox Pro tool for this. GL, AP. We are wondering that GL used for Tally and also Fox Pro. See, here they are having some, for example, Muthu Foils and Wheel Division, but here they are using in Chennai office. Okay, so what we understand from the Assess team. They are using Tally, they are using Fox Pro for different branches. So we assume that in even different branches, different business, they are using different software. Okay. So we have to study everything and we have to bring into Oracle. So this is our thing. So they are using Clipper and they are also mining. For mining industry, they are using manual. So this is the as we are checking it. Okay. And what they are telling subledger account code, how they are making, they are having customer, vendor, employer like that. OK, so this is how the sample document is made like that. Each one will have each company. Suppose IT company is there. No, they will have each thing. So you will capture. See what are the branch they are having everything. Why in detail we have to capture is, as I told, no, the person who comes has to read this and he will understand. I'll do the next step. OK. So this is the documentation we will do after the at the each stage of implementation. Okay, right. These are all we'll see last only, but I'm telling you what they will make because easily it cannot be done, right? We have to understand the business and we have to make it. Okay. That's how we are. Right. Basics. Okay. You can see the Excel, right?
Yes, sir.
Okay, right. So I shown the documentation of the complicated process. Normally you will see very simple only. See, they are using Tally means what are the process they are using like that you can see. Okay. So these are all we seen in GL. Till now GL, what are all we are setups primary ledger. Okay. If you go to accounts payable module, what are all you will study? You will study what are the type of invoices. What are the type of invoices? You know, there is normal invoice. We call it standard. Okay. So debit memo, credit memo. Okay. And we have prepayment. Prepayment is nothing but advance invoice. Okay. What is standard invoice? A normal invoice. So you are going to a shop purchasing something, it's an invoice. Expenses to liability. Okay. What is debit memo in AP? Tell me, it's wrong also, I'll correct it, no problem. What is debit memo? Why we have a debit memo in payables?
Any additional payment or excess payments?
Additional payment or expense payment, debit memo. See, you want see what is
maybe
it?
the invoices may be wrongly raised. Invoice
Correct. It
ತಪ್ಪ
will be
raise
wrongly
பண்ணிட்டாங்க.
there. You are making an adjustment. But suppose standard invoice amount is 100,000. You are making. But in AP, debit memo and credit memo are only negative. That means you cannot make an additional invoice. It is only negative amount you can make. Then what is the difference between debit memo and credit memo now? Both are negative. Like you said, I inspect the goods, I am returning something, I'll raise a debit memo, minus 100. So net amount you can pay, correct?
Yes, sir.
So credit memo also has same purpose, no? What is the difference now in basic accounting?
Debit note will be raised by the vendor also.
The document that recorded the notification.
Okay,
The
debit memo like you said. So debit memo, we are creating it, okay? So we are purchasing it, we are creating, okay? So the credit memo, we are asking 100 items from the supplier. So maybe when he is delivering the goods, he is finding in godown only 95 is available. So he himself will raise 5 credit memo. When from his side he will raise, it is called credit memo. Only business logic, but nobody stops you, whatever you create. Accounting logic is same, right? Correct. Here you find out it is debit memo. You find, so they are giving 100, you find 5 defective item, right? Then you raise a debit memo. Okay. Anyway, it is defective means minus only. What is prepayment is advance. Okay. You are giving advance to supplier. It is raised as a prepayment. Okay. And we have withholding tax invoice, recurring invoice. Recurring invoice another type. Withholding tax. What is withholding tax? Withholding tax means it's like a TDS.
GST, TDS.
Any tax. See, suppose you take TDS, you create a invoice for 1,000. In that 100 is a tax, means in invoice it will be deducted 100 and automatically an 100 should be raised to tax authority, correct? It will be automatically raised by the system. We have to do some setups, that is called withholding tax invoice. Okay, these are all type of invoice. What is recurring invoice? Recurring invoice repeated. See, every month I am creating rent. Why I have to create manually? Okay. Suppose, see, we are thinking rent expense to cash, rent to bank, not a single line entry. So you will create for 170 country or one country, you will create for 100 branch. It may be consist of 500 lines. So what is a recurring invoice? The template will be copied every monthly. So only you have to check the data and do it. That possibility is there here. Okay, recurring invoice. We can use for rent or whatever in recurring expenditure. Okay, so these are all invoices and payments is there. Okay, payments we can have a single payment, manual payment or batch payment, single payment or batch. Where in Oracle we have this type. Same here in invoice also. While creating, you can either create in single or batch. Okay, so what is the difference? You can directly create an invoice. If you create a batch, you have to give a name. That's it. So to have a control, suppose there are 10 users. Okay, you have to know who created the invoice in the batch. Anyway, the username is recorded to have a control with the amount and the name, or you want to bifurcate. Payments also we have single payment and payment manager batch. Okay. So we have AP setups. So these are all types, you can see AP setups, financial option and manual, payable option. Why setups is important? Okay, right. Suppose in India, today is 1910. Okay. I give a check Mr. X. Today I am giving the check physically. So he deposit after 1 week, maybe 25/10/2023. They deposit the check. Okay. Okay. Now having Oracle. So he's trying to enter. In my book, this date I have entered. He trying to enter 19th October in his system. Okay. So according to the setup, it will tell no predate checks allowed, because there is a setup. No, in the setup there is a tick mark that predate. What is predate means? Prior date. Today's date is 1910. It will accept only future date. Okay. Future date, predate, we are having a control. So it won't allow. So now you know the use of the setup. So while doing the setup, you have to see whether this country, we have this option. Because for us it is 3 months, right? Once you give the check, it is valid for 3 months. So you have to allow the predate. Whenever you receive within 3 months, you can get it from the bank. It is allowed for us before 6 months, now 3 months. Maybe some country it is immediate, or they are not allowing the predate. It should be immediate, like a DD or something. They want to do it. So you have to cross check. This is where the consultant work is there. These are all everything end user can do. Standard invoice, debit memo. So we are controlling everything in the setups. As is, when we are doing, we have to clearly identify what is the requirement. Okay. Have the options in the setups, what they are having and what the accounting they are doing, what are the taxes they are having, like that we will see. So same thing like AP, we have AR. AR also having same types. Standard debit memo, credit memo. Here both are negative, but what happened to the AR? What, tell me what happens in AR? In AR debit memo, credit memo, what signature it is created? What sign? We call transaction here. We are making the sales here. Debit memo, credit memo. In receivable, debit memo is positive, credit memo is negative. Why? Have any idea? Why? Because like you said initially, see, I am raising an invoice to my customer. Invoice amount is 1000. So everything is ready. So the customer is calling me at the final time. What he is telling? See, if you have extra 10 items or 100 items, give me. There is a demand in the market. I need it. You already made a bill and everything. At the time you are adding 100 unit or 10 unit. This is one scenario. Or you miss to add the freight. You can add in the debit memo, freight expense. That is debit. Credit memo, like in the AP we seen something missed or something like that, we can make a credit memo. Okay. So this is the difference in AP and AR. Debit memo is positive in AR here. So here we are giving advance. Here we are receiving advance from the client. So we call deposit. We have deposit invoice. And also we have guarantee invoice. Guarantee. What is the difference between deposit and guarantee? Accounting term. Any idea? Tell me. And we have chargeback invoice type. Each and everything we'll see one by one slowly. So what is deposit? You are receiving deposit from the customer. What is guarantee? See, deposit involves physical cash. Guarantee, if some existing If existing customer is giving guarantee for somebody, see up to 5 lakh, I am giving a guarantee for Mr. X, for my brother or my relative like that. It doesn't involve physical cash, but it will have a limit up to this. It is supported by somebody. Okay. So what do you mean by chargeback? Chargeback, it is automatically created from the receipts. See here we are having payment, right? In AR we call it receipts. Okay. Up to this, you have any doubt? What are we seeing in theory? That as is to be the document, leave it. That finally we'll see. That is too much for as of now. Just I shown the sample. Okay. So receipt of money is different from the payment. Payment, you directly make a payment. Okay. So suppose you are receiving money in the bank, you don't know the customer. I don't know who is the customer. Then the amount will go to unidentified. There is an account called unidentified in account, and also the tabs radio button there, unidentified account. So you know that money is coming to bank, but you don't know the customer, that is going into unidentified. Second, you know the customer, but you don't know which invoice you have to apply. That is called unapplied. Okay. Once the invoice we have identified and we have done, it is applied status. So this status will come in the receipts. Unidentified, we have to check and clear. Collection team will look into it. Unapplied, we have to know which invoice. And we have refund. See, excess is there, we can refund it. That is also there in AR. And we have a app called on account. What is on account is, suppose customer gives 10,000 rupees. We applied 999 according to the invoice value 9990. Okay. Regular customer. Okay. And we have a balance of how much? 10 rupees. So there is a chance of refunding. So either we can refund him if customer needs, or it will be lying on the on account. It's a temporary account where it can be adjusted against the next invoice. Okay. This is what is. Okay, now we seen the all overview of payable, receivable, and GL. Another we'll see if permit assets and cash management. Then we'll next week we'll go into the